Hey everyone, welcome back. Asher here with Next to Mortgage. We're here once again with another incredible guest. This is Scott Clarke of SmartFi Home Loans. Scott, thank you so much for being with us.
Yeah, appreciate it. No, thank you for having me and the opportunity to kind of talk about reverse and also to work with you.
Appreciate it, man. And as you just touched on, this conversation is going to be focused on that. It's going to be focused on the reverse mortgage because that is your guys' bread and butter, correct?
Correct. Yeah, this is what we do here. I mean, our only option that we offer is reverse mortgages. So that's what we focus on. That's where our area of expertise is. And it's just something we personally I enjoy doing.
Perfect. So, can you just share a little bit about your background? How'd you get into the mortgage space and then specifically the reverse mortgage space?
Well, I was looking for an opportunity. I was finishing my graduate degree and I had a son on the way. So I was kind of taking a break from working. I was unemployed and I said, okay, I went to a job fair and got hired by a company called One Reverse Mortgage. It was roughly about 16 years ago. And, one of the things I've always believed is that people work really hard their whole life and they should be able to enjoy retirement. And because of that belief, it was something that just kind of fit natural with my belief system. I wanted people to be able to do things with their, once they're retired, have the ability to travel, have the ability to go out to eat, just enjoy life. You work too hard in life to kind of just, at the end of the day, sit back and watch TV, and that's all you can afford. So yeah, it just kind of fit naturally with what I believe in, and that's kind of how I got into it.
I love it. So, kind of, branching off of that, and you kind of touched on it, you want people to be able to enjoy retirement. The reverse mortgage helps people do that. And I guarantee there's a lot of people out there that they're just not familiar with a reverse mortgage in general. Can you give us a quick overview of what it is and, why is it, not necessarily why is it different, but what's different about it than a traditional, 30-year conventional FHA type loan?
Well, I think one of the biggest assumptions or one of the biggest, oversights in the mortgage space is, hey, the reverse mortgage is something different. It's really just a mortgage. I like to look at it as more of a payment optional mortgage. And so when you're looking at it, it's, we have a lot of different mortgages in the mortgage space, interest only, cyclical mortgages where you pay, a certain amount per year and then certain parts of the year you pay less. This ultimately is just a mortgage, a payment optional mortgage. And really the process is the same as any mortgage. Really, the only difference is that there's a counseling session that's required. And that's really a good thing. I mean, with any mortgage you jump into, when I got my mortgage, I didn't have counseling that I could actually, I mean, you could, but it's not required. With this, you have a third party agency who doesn't really care if you do this or not. But what they care about is you get the right information. So you have somebody, a sounding board where you can talk to them, ask questions, and they don't care if you do the reverse or not. And I think it's a really good thing that puts a lot of the borrowers' minds at ease and answers some of those questions and those misconceptions that are out there in this space.
I love it. So counseling, what else is, does someone need to do or to be in order to get a reverse mortgage?
Yeah, I mean, the age is the big thing. So there's an FHA option and there's a proprietary option. For FHA, at least one of the borrowers, if they're married, has to be 62. So husband and wife, one of them has to be 62. One could be younger. For the proprietary, they've got to be at least age 55 and up. Okay, both borrowers. The second piece of it is they have to have enough equity, either program. Okay, if they just bought the house and they just put 20% down, they're not going to qualify unless they have more money to bring to reach that equity position. The other pieces of it, there's a residual income requirement that's different than debt to income. So that's one of the pieces. And then there's some credit requirements. For the FHA, there's not an actual credit score that you need. It's more or less, we're looking at trade lines. We're looking at, was the borrower, have they been responsible with their credit? For our proprietary, our investor does have a middle score, at least 600, and there's some additional credit requirements from score 600 to 640. Above 640, as long as the property charges are on time, we don't really care about charge-offs, collections, and the such.
Well, cool. So one of the big things, and I think you also mentioned this in the beginning, and I'm not going to lie, there's a lot of myths and misconceptions that I believed before I ever even truly looked at the reverse mortgage. Um, as a specialist in this space, can you touch on maybe one or two of the most common myths or misconceptions that you've seen, and you know,
Yeah.
what do we do about those?
Well, I think a lot of people, and this is the thing. I mean, we live in a world of pseudo experts. You can go talk to anybody and they've watched a YouTube video or they've Googled it and they know everything.
Hmm.
And that's why it's good. They talk to you, they talk to the counselor. They get the right information to make the right decision for their family. I think one of the biggest is that the reverse mortgage puts your home ownership in jeopardy. The reverse mortgage is just a lien on title. Okay. It's just like any mortgage out there. Any mortgage you have ownership, the lender has part ownership, right? Until you pay it off. So it doesn't put it in your home ownership in jeopardy. It just has a device against the title, a lien, that just ensures that the lender gets paid back. So can't come in and just take your house. We don't, you're not giving up your house or ownership of your house. You still own your home. So that's really important to know. I think a lot of people think that, oh yeah, once you do the reverse, the bank owns your home. It's not the case. The other thing is that the heirs, like, oh, I don't want my kids to be responsible. Your kids are not responsible for the debt at all. The reverse mortgage has a functionality called non-recourse, which means that the lien could never be more than the home is worth. So you can never pay back more than the home is worth. So if in an instance that the market drops, or you live really long and you owe 600 and the home's worth 500, the only responsibility for the heirs will be to sell the home for the 500 and pay that back. The 600 that owed is not their responsibility, so they'll never be on the hook for any of your debt.
I love it. And that's the one that, even though I'm not a specialist in this space, I haven't done a ton of them. That's the biggest one I hear. Well, what if, my parent lives longer than expected and now they owe 600 and the house is only worth 500 because maybe the market dipped or whatever the reason is.
Yeah,
It's reassuring to them that, hey, my parents they get to live as good of a life as possible because of what they've done with this home that they've taken care of. And when the time does come where they move on, none of that burden's on me, right? I got to
exactly.
enjoy the moments with them, and now I'm not regretting, oh, now, I owe 100,000 on the house that they lived off of, right? That's
Exactly. I think, I mean, just in life, I mean, my personal belief is, hey, I have kids, I worry about my kids. And as kids get older, they worry about their parents. And I think that's one of those things as you grow up, your parents want you to, to not worry about you and taking care of yourself. And that's vice versa. You don't want to be living your life, taking care of your kids and worrying about your parents being able to eat, being able to pay for medicine, being able to do things on their end. And that's, like I said, that's a big misconception. I think one of the other big misconceptions out there, which is important to note, is I mentioned it earlier. This is really the name should not be a reverse mortgage, because I think when people hear that, it's very polarizing, right? You're like, oh, reverse mortgage. But when you hear payment optional mortgage, that's a whole different ballgame. You're talking about, hey, I can make payments. So I'm a big advocate. If you're 62 or older, do a reverse, make payments, try to fully amortize it, just like you are. But if you run into issues where you can't work any longer, or you have medical issues, or you have needs, you can take a break on your mortgage payment. You can stop making payments if you can't work any longer, but you can make payments, which is a huge, huge thing that a lot of people don't know. And it puts your mind at ease, like, hey, I can make payments. I can pay it off at any point. I can refinance it. It's just a mortgage. It's not, a jail sentence. It's not the end of the world.
hmm I love it. It sounds like a big advantage, right? To those who, right, nobody wants a mortgage, let's be real. In an ideal world, no one would have a mortgage, but for those that need one, this could be a godsend. And it sounds like if someone even just, hey, I'm 62, let me just look into it and use it maybe as a, potential investment tool, not just a, hey, I don't want to make any payments for the rest of my life, which you could do. It could be a benefit, right? What
Oh,
other,
yeah.
yeah, sorry, go ahead.
No, yeah, I agree. That's one of the biggest benefits to this is, it's obvious there's no monthly payments. So you can look at a lot of different scenarios, and it doesn't fit everybody, and this isn't for everybody, right? I mean, the reverse mortgage isn't for everybody, but when you start looking at each individual's current situation, the money can be saved, could be invested, or just used to live. You might find people that are like, they have a nice 401k. but they're actually taking that money from the 401k just to pay their mortgage. So in a way, you're just moving around your assets. You're like, okay, I've got money here in that's liquid in my 401k or my savings,
Hmm.
but I'm putting it into another asset, which is equity, which is not liquid. So it's just, people are just working to pay their mortgage. Hey, I'd love to retire, but the reason I'm working is just to pay that mortgage. So maybe they can retire 5, 10 years early. So there's a lot of different advantages. Each person's different. I used to say each borrower is like a thumbprint, right? Everybody's different,
Hmm.
but this program can be customized to really help each individual in many different ways. You just really need to know where those issues are, where the challenges are each month, and kind of make that work.
Exactly. It's good to know. And then one other thing that I bet a lot of people don't know, yeah, we can refinance the current loan we have because we're making payments already on this house. And that's the most common way, at least I've seen reverse mortgages done. But the other aspect is you can actually purchase a home with a reverse mortgage. Is that true?
That's correct. Reverse for purchase, R for P, for the people in the industry, but reverse for purchase is a great retirement tool. It works just like a normal reverse, no payments. You just need to bring enough cash to closing to establish the right equity position, okay, depending on your age.
Okay.
And the way that really works, is really putting you in a position where you can, get into that home you want to. So I think it's a real good, great retirement tool.
So which kind of, speaking on the reverse for purchase, what kind of scenario or, you know, in general, what type of client do you see usually using a reverse for mortgage or reverse mortgage for purchase?
Yeah, it's got to be the right fit, right? I mean, it's got to be somebody who's wants to downsize, looking to right size, relocate. An example I give a lot is, I'm in Michigan, so you got somebody in Michigan who's done with the winters and they want to move to Florida, so they sell their home in Michigan, and they have $500,000 from the sale of their home. Well, they could obviously go down to Florida, and this is the goal for a lot of borrowers. Hey, I want to buy a home so I don't have a monthly payment and I'll just pay cash. Great. Well, with the reverse for purchase, you could take that 500,000, buy a home in Florida. Don't put all $500,000 into it. Put a portion, maybe 50%, maybe 60% of that money, and you still have no payments, but now you have liquid cash to back up on. I mean, right sizing or upsizing, it'd be one of those things where, hey, I sold my home for 500, and I've got 500,000 in equity, but I want to buy this home for 750. It's really in this great neighborhood. I've always wanted to live there. Well, now you can get more buying power from your money by using the reverse for purchase. So it increases your purchasing power. So I think, relocating, you want to move closer to the grandkids, whatever, but it's
Mhm.
definitely a great way to take that equity that you've worked hard for, that you've paid over the years, and get the most bang for your buck, but also, either get a bigger home or have a situation where now you've got a couple 100,000 in the bank and you've got the home with no payment and you're really set up for long-term retirement.
I love it. The optional no payment, right?
Yeah,
Or
optional. Yeah,
optional
absolutely
no
optional.
Well, okay, so we know that the reverse mortgage, it's just another mortgage. You did touch on we got to get some counseling. If someone's interested, it's required that they have to go through counseling. We talked a little bit about the right borrower for it. Can you walk us through maybe what the process would be like? That's a little, is it any different from a traditional mortgage process?
Really, it's not. I mean, it's for the reverse mortgage, we use a different application form. Most people, they won't know it's a 1003. 1003 is for any mortgage you've ever got in your life.
Hmm.
Reverse use the 1009, but it's the same information, name, birthday, social security, income, address, all that fun stuff. Uh, the process, but really only differs from the counseling. We have an application, we still have the appraisal,
Hmm.
we have underwriting and closing. Like I said, the one only additional step is the counseling. And I think sometimes the big misconception is, hey, the reverse mortgage, let's take forever. They really don't. I mean, on average, these close in about 35 days on the FHA option. The proprietary actually closes in 24 days. So doesn't really take much longer. There
Hmm.
is always going to be a manual underwrite. There always will be the need for an appraisal. There's not property inspection waivers or appraisal waivers. But
Hmm.
for the most part, we've got it down to a science where we can take it from point A to point B in a very short period of time.
I love it. Well, thank you so much, Scott. I appreciate you, coming in, shedding some light on reverse mortgages today. Um, as a, kind of a send off or a final question, if someone is interested in learning more about a reverse mortgage or applying, what kind of advice would you just what would you give them?
Well, not to contradict what I said, but a reverse mortgage, I said reverse mortgage is just a mortgage, but it can be much more than a mortgage. Okay. It's a strategic retirement tool. There's a lot of people right now, that, think that the reverse mortgage is the last resort. I've tried everything else. I guess I gotta, give in and do a reverse. It's not the case. There's more and more mass affluent people out there. They have 1.5 to $2 million in investable assets that are using this as a complement to what they've already done as an insurance policy. They set up a line of credit that grows every month. And that's something talk to Asher about when you have an opportunity. Because if you don't have a mortgage in your house and you don't plan on leaving it, you've got really a locked piggy bank that you can't break open, right?
Hmm.
It's not the little rubber stopper in the bottom. This is a way to kind of put that rubber stopper there so you can take money out when you need it and to complement your retirement to give you more wealth, to help your assets, what your savings are, last longer than what you're seeing. You talk to your financial planner and he's like, oh, bad news is that your money's going to run out when you're 80. Do the reverse. Now you've extended it maybe 5, 10, 15 years by using a coordinated withdrawal strategy. So there's, you know, with the reverse, it's not just for, people that are in dire straits. This is for people who are also looking to bolster, to complement their retirement plan and just give them more flexibility, for the rest of their life.
I love it. That is the definition of a golden nugget right there. Well, thank you so much, Scott. I appreciate you joining me today, sharing your insights, and we'll see everyone soon.